following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi, everyone. Basil Chapman, Tiger Technicians Hour, this first day of May. And my pleasure to be here. It's 7 o'clock till noon Eastern Time, Monday through Friday on market days. And I follow Steve Rose, 2 hours, of course. Programming all the way through today. So it should be a really fine session. And Dow's down 30. Let me go through the numbers. I decided just a few minutes ago I'm going to do something that I never do. I've done a little bit of it once before, but I've had so many questions about a certain Chapman wave techniques and about entries and how come under these circumstances did I have a fully long position. In fact, 6 longs. We don't usually have more than 6 longs at the best of times. Just 2 weeks ago, when things were bearish, and I flipped to the long side, and we started adding. What was the reasoning? And so, I think the best way will be to show some stocks and to also show stocks that we had and we got out of with nice gains. And today, 2 of them are just the big leaders. One's up 6.5%, and the other is up was up more now. It's up 3.5%. Actually, I shouldn't complain. We've got some that are up almost the same. Yeah. So okay. The Dow right now is down 18 at 16,582. Now this is really interesting. Yeah, this is. I'm going to do this step by step. The pattern that I'm looking at here is not yet a very bullish pattern in the Dow. What I've said is that these double tops tend to sneak slightly higher and then pull back quite sharply. And unless there's a Dow rocket ship move, remember I was looking for so many words that could, you talk about a crash. What word on the upside is the exact opposite of a crash? Nobody ever talks about that. All I can say after years and years of trying different words, the one that seems to fit best is a rocket ship. When something takes off and it just rockets through the different stratas, that is a powerful move. And that's what's needed here. But you can see I'd already drawn in the left side, right side price time match to the 16,600 area, possibly 16,631 all-time high. But that was to May the 1st. There it is. The left side, I'm going ahead of myself. Left side, right side, Dow's down 18. We almost got the, I'm explaining that more in detail. Let me just finish the numbers because I know that many of you like to hear the numbers at the hour. The S&P is now unch at 1884. The comp index is up 16 at 4131. Oh, this is going to be so fascinating when I explain something to you. Gold is down 14, was down a little bit more at 1281. It's just making that pattern that looks like an H pattern. And the H pattern I've shown you many times in my my CD introducing the Chapman wave methodology. It looks like a lowercase h, and there it is. This is the 120-minute chart. It made an H that went to an M, failed, and it's going now to retest the major H pattern that had not the low of the 24th of April at 1268.40. This is the contract itself. The low of 1275, I think, 1275.80 back in the 22nd of April, a little bit higher. Why did I choose that? Because there was an aberration with that spike to the downside. I felt much more comfortable taking a left side, right side price time match to the exact peak C minus. C minus always says you're going to go back and retest the lows, be careful, and that was the high of 1306.60. Now what's happened, you've got yourself a little rectangle formation, and that rectangle formation with a flat stochastic and the MACD still expanding says, be careful, because if you take out the low of yesterday of The low of today, 1277.30. At any point, there's a lot of downside still to come. So I'm very cautious in gold. Bounces, yes, but that H pattern is potent. Now, what we're looking at is that silver's pullback at down 19 cents at 18.90. Platinum's pullback $8 to 14.17. High-grade copper's sticking around in the 3.03 area. That's okay. Crude oil's back down at 99.21. Bonds are up 17 seconds, and I will try to get to that in a moment. If it's possible, I'll try to get to, and let me just quickly do something over here. Okay, Al, I'm getting all ready. So now what we're looking at also is that bonds have rallied with yields within the same area. And I'm going to have a look in a short while to see whether the 30 has made leg D to the downside in the weekly chart. That'll be fascinating. We've got the dollar 0.04 at 79.57, the euro's unch. Now, I want you to go through certain things. And I could do this. I'm just almost Al, my engineer. You want me to wait for the break? I could do it right now if you want. I'm all set to do it. And it's just, it'll be 2 seconds. It'll be like as if I was taking a sip of water. I've already set it up, and just tell me what to do. I'll just change. Let's switch. Okay, folks, you're going to get just a little hiatus, as if I was taking a little sip of water, which I'm not. Here we are. We're all set up and we're ready to go on the different headset. Here we go. So let me get out of that here. Let me just cancel it, and that'll make it easier for everybody. And also, there you are. Push, and we're out, and we are set. So this is what I'm looking at. Put that away so I don't mess it up. The Dow, let's go back to that pattern that I was looking at. This is going to be like a lesson in the Chapman wave, and I'm doing it now because it is most appropriate in terms of what has succeeded, what I got out of too early, even though it was successful, and just to explain, I don't know how else I can do it. On the just discussing it is no good. So the Dow itself had a pattern that was looking like the arch, like the cup formation. The cup formation in my CD introducing the Chapman wave shows on slide 311 in the chapter on cup symmetry, or the cup formation, shows the mirror image of the left side going to the right side with diagonal trend lines, and I'll show you exactly what that means here. If I choose this doji candle right here on the 17th in the Dow chart on the high of 16,631 on the 4th of April, I treat that as a midpoint. It took me to May the 1st. That's today. And what I said is there's a chance that we will go toward, exactly on, or just above 16,631 on May the 1st. And that's exactly what we've done. The MACD is at 88%, and that's good. Stochastic is, the MACD always say that. MACD is very good. Stochastic's at 88%, and that's very good. If the MACD flattens out, the Dow will go higher. The support is at 16,488. So, and you see this little pattern here. Let me just check to see that you're looking at the same thing that I am at the same. There it is. Yes. So if you're looking at this dashed line, and you're looking at that purplish, pinkish line down there, you will see that's the pattern that I call the falling axe. Why? Because it has, like, the handle comes straight up like that, and then there's the blade, which is expanding but pulls back, so it's like an expanding cone on its side, tilting down. That can give you a one-to-one expansion to the upside. We've just got that almost exactly, 16,312 to 16,500. Is 180 points, and from this low right here, from the low of 18,451 at 181 points, and that takes you to 16,000. Is that 612? Today's high was 16,604. So we've just about done that. So that's one thing. The other is that the volatility index had pulled back so sharply that it said to me there was a chance to retest the highs. Okay, now our positions. I'm going to do two things now. One is that we've got people waiting. I'm going to include in that how we're looking at our different stocks. I don't want Mark to hang on too long. So, Mark, we're going to go to you. Mark in Denver, you are looking at?
Lovely friend Staples.
Okay. So SPLS.
So my question for you is,
yes,
real quick, is I played this twice now with some May options. I've already gotten a really nice return once, and I bought some back when it was yesterday near the lows. And I'm wondering, since we're hitting a peak D in the daily, are you thinking we might get a little bit of a pullback here on this one, or do you think, because the one-to-one expansion that I'm reading takes us to about 1310, but I don't know if you think we can get there before the second week in May.
Is that going from the low of 1157?
That's going from the low of 1104 on
the one before that.
And then I think the other one would take us there as well.
Yes, I was going to say, because there's an ellipse, there's an overlap. Now, this is a very interesting thing. Folks, if you're looking at this chart of Staples, SPLS, which we've been long a couple of times, one of the reasons why I want to get back in was Staples' 120-minute chart went to a peak ABCD, then it recycled, it seemed to recycle, and it went to a new ABC, and then it went to C1 at 12.49, and then it refused to go higher than 12.48. I treated that as, in the Chapman wave methodology, as a peak C1, and everything about the next move said that it should have made that extra penny higher to go to the D, the requisite D, where we start to get a little bit cautious. Instead, it went to just a fractionally lower high bar, and I treated it as a C1. And in this case, I didn't do it here, but I'm doing it now. I put a red plus sign. Why? I can't put a down arrow. There wasn't a D. I can't put an arrow on the C2 because that's a lower high. That defeats the purpose of up arrows and down arrows. So I put a plus with a red sign, and that says there's a good chance that we can pull back. We could still make the D, but be careful. Well, the stochastic MACD did pull back, and with the price, and the price stopped right on the 200-period moving average at 1157 at 11:30 on the 11th of April. Then it had a spike to the upside, pull back, and then it went sideways, but it also built what I call a bowl formation, B-O-W-L, a bowl formation. If it breaks out of that, that's usually very positive. And what did it do? It broke out and it went twice. It went to a double top once again, but this time it was exact at a peak F at 12.67 in the 120-minute chart, pulls back to 12.29, and now it's broken out. The only way I can call this particular leg right now, I believe, has to be new fresh leg B. Now you say to yourself, wow, we've got a D, a potential D in the daily, but a B in the 120-minute chart. How do we trade it? And I'll be back and we'll discuss it with Mark in Denver. The Dow's down 6, S&P's up 1.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Folks, we're back. So now we've got Mark and Deb. We're looking at staples, which in my opening call we are long. And what's most important about this is that I am going to be calling this a leg B for now in the 120-minute chart. I don't see any... Either way, if there's an alternate count, it still comes out to B. So I like what I see. The fact that it's in D in the daily is not nearly as important because you know that D's can continue up as the gap. And the gap is 1322 to 1281. And what we've done with this, to 1201 right there, 1201. And we're already at 1273. It looks to me, and I've got notes in my, I've got a book with different chart formations, and I haven't looked at it for a couple of days because I've just been so busy trying to plan so that we can get all these different stocks that we are long. I mean, 6 stocks, it's a lot of stocks. To be able to organize in my head and for my subscribers to be able to make it as clear as possible why, wherefore, etc. But there is enough evidence to say that there's a chance, and I spoke about this, and one of the reasons why we went long 2 very powerful momentum stocks just the other day is because I'm looking at this and I'm saying there is just a chance now through the rotational correction that the momentum stocks and possibly, I don't know yet, the biotechs, which a very important session, how the biotechs close today is going to be very important, that I have enough evidence to show that gaps to the downside when they get filled in a certain stair-step manner, can be major buy signals. In other words, the lows that are made, that are established, especially if there's a gap to the upside afterwards. I don't even mind the gap to the upside. I just want to see a stair-step move, exactly what Staples is doing. And I just got an email to say, don't forget, earnings are due May the 20th on Staples. So that's still a while to go. But in the meantime, I think the gap is going to be filled up to 13.22. But this is the very interesting part of it. If at any point in the next week and a half before earnings report, there's a move above the candles of the end of February, round about the 1377 level, there is a chance that if Staples comes in finally and says, and I know they're working real hard. I can tell by the emails. I can tell when I go into the stores. It's a different attitude. That there's been a change that is starting to become bottom line reflective. I think that Staples has the chance to have a really good rally on a percentage basis. So I think you're in the right position. Now, you got make calls. That'll be done in 3 Fridays' time. You could have done 1,000 things by that time. But what I am going to say to you is, number one, I love what's going on. I like the MACD and stochastic at 84% in the daily. I believe that it could go to an E and an F. A lot depends on whether it pulls back below 12.36 to 12.26 is really important support in the next 3 to 5 sessions. That's number one. And number two, the fact that you're starting to really focus in on a couple of stocks and understand them makes it so much better in trading, because you get to understand how they react on good days and bad days. Market independency is really what you look for. Does my stock do things on certain days that show strength within the stock or weakness as the market is doing such and such? So congratulations, you've had a really nice trade. The only thing I'm going to say to you is I don't know how many calls you have gotten, but I would reward myself with taking at least something off. Money management, ego management, a whole bunch of things. Doesn't have to be right now, but I'd be getting close to just taking something off and saying, you know what, I'll put that back on the next sharp pullback.
Yeah, that's kind of what I was wondering about this peak D on the daily. Are we going to get a nice little pullback?
Right. So if it's B in the 120-minute chart, and I'm correct, and so far, it's such a strong candle. I think I can feel assured that it is a B. I would say if it doesn't make a leg C above 1280 to 1285 by Friday afternoon or Monday morning, then maybe it's going to stall a little bit longer. But the way it's looking, this is a very powerful move.
Okay, and I just wanted to congratulate you. Almost every call you've made in the last couple of weeks has just been knockouts, and really, really impressed.
Gee, thank you very much. Oh my God, that's a kiss of death. No, I'm done. Sell everything. Thanks, Mark. I appreciate that.
All right, talk to you later. Bye.
Have a great day, folks. We'll be back, and I'm going to continue on this venture that I'm talking about. I don't like to do it. I just don't know how else I can do it, but to show you how we put on our trades, what we're thinking, and how I really want to show you the Chapman wave. I've used it for so long. I love it. I'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. So, yeah, we're going to do Dan Peaky was just showing you there's a word called canon horror, which means with a bet, it's a curse in reverse. A colleague says with best intentions, "Look like you're going to get a promotion, Jack." Canon horror. And then you quickly cover his mouth because I call it the trading guards. I'm not tempting the trading guards now because we'll have stops in, and that's just the way it is. But believe me, the trading guards, I call it hubris. It's really that. If you are showing off and you are patting yourself on the back, my expression is when you take your hands off the wheel to pat yourself on the back, that's when you hit the tree. But in the meantime, back at the ranch, I needed to show you some things. And I'm going to show you. Should I go alphabetically? I'll go, you know what I'll do? Because LinkedIn is coming out with earnings this afternoon. We went along LinkedIn in my opening call, just about at the bottom. We went in at 140. Let me just double check. I think it was 147. I said the wrong thing. It should be 147. Initially. All right. So, no, that was a different stock. So we bought LinkedIn at 150.25 yesterday. The reason being, there are a whole bunch of reasons, but my assessment was that LinkedIn had made, in the Chapman wave, it made a a peak D at 257.56. And then on all the way down, it just kept making these H patterns. It went to a peak A and then a B minus. Once it went to an A minus. But almost every other time, 1, 2, 3, 4, 5, 6, 7 times, of which 6 times it went only to an A minus. 1 time it went to an A minus. 6 times it went to a B minus and went to lower lows. And at the bottom, you finally got, now let me expand this. You finally got the stochastic when it went to trough E at 158.06 on the 7th of April. The next time it came down, it went much lower down. It went to a low around, was this the one with the round number low? No, it went to 143.26 on the 28th. But look at the stochastic and look at the MACD. They were way higher. And the histogram was way higher. So I thought there was a really low-risk entry point on the long side. So we went in yesterday morning. We were lucky to get it pre-open. You could have got it just after the opening as well within that area at 150.25. So this is what I said. And then after I get in, I'm very slow when it comes to this stuff. I suddenly see something go by that says LinkedIn earnings coming out Thursday afternoon. Oh, I thought, oh man, that's terrible. Well, first of all, I saw earnings. I thought, oh, if it's in the morning, we could be in real trouble. But fortunately, it wasn't. And LinkedIn had a very nice session yesterday, and it was a trough F confirmed by the move. Everything moved very nicely. The 120-minute chart, and I showed this to subscribers. I showed them this morning. I'm going to be doing Larry's show after this. So I wanted to show. I call them triangles. It's really like it's really like an expanded Gartley in a way. And it went down to the H pattern. They went to a larger M formation, and then it pulled back sharply. It said to me that in the 120-minute chart, the unbalanced volume was about to turn up, which it did. The retracement with a successful test above the low of 143.26 and 144.02 and closing higher was a very good sign. So we were very lucky right there to get in long. And what happened was, and then all of a sudden last night it started to improve. It closed at about 153. Suddenly it's trading at 155. And now it's trading at 163.57. What I said to subscribers this morning is that we're going to sell 1/3 at the open. And that was at 157. It actually opened at 157.35. Sorry. We were going to sell right there and there if you were able to trade beforehand, but at the open we would sell. So we sold a little bit. So now we've got 2/3. Then I said if LinkedIn closes above one, now I would not have done this at all if there were earnings today. I would have said, let's just raise the stop. And on one part of the position, if we got to 159.10, I said today to get out the second 2/3 at 159.10. I said that if it gets to 159.10, raise your stop to 156 something rather, 155, 156. Why? I really want you to hold the full position as we do in another stock that's doing very well, a high, very, very powerful, strong triple-digit stock that came down huge. I can't remember. One of them was down 40% or something. I mean, that's unbelievable. So now we've got 1/3 left, and if earnings come out and they tank the stock, at least if it closes anywhere near 161 to 165, it's trading 163.84 right now. If it pulls back $15, we take a bit of a loss, but we kind of almost break even, and we can assess and see what's happening. But I'm going to sneeze. Excuse me. But in the meantime, back at the ranch, thank you, all those bless yous. It's in leg B in the 120-minute chart. So it cost me potential But who knew that Yahoo would come out last night and be received so favorably? It's one of the reasons I think that LinkedIn, I don't go to LinkedIn, but I think LinkedIn is moving very nicely. And it's saying to me, here up 10 points from yesterday's close, that if it was to give back 15 points, and with a move like this, my suspicion is that it'll ameliorate some of the negativity if there is. I'm prepared to deal with that. It's just money management. But if it spirals from here tomorrow up 5 points or 12 points or whatever it is, we are still in the position. And on the next big pullback, I might consider putting back to work. It's a pity that I even had to make changes. But it was money management. I want you to explain. On the one hand, I've got my Chapman wave methodology saying, hey, this is a strong leg A. It's made a fantastic, look at this. Look at that support line, that green support line that's come in. It's done everything that it should on the downside. Now it just needs to relieve some of this downside energy by spiking higher. But wait a minute. The candle that could form in the weekly chart says, lovely move so far with a day to go, day and a half to go. The on-balance volume in the weekly chart. The stochastic is still at 13%, but it has crossed positive. It could almost be giving a buy signal, but nothing like a buy mode. Just a signal to say, keep me in mind. I might be going high. I might try to test the 9-period moving average at 176. But that's the way I wanted it. The weekly chart is still it's still looking terrible. So this has to be treated as a trade. I thought I wanted to go through that with the different techniques, with the different, you see this little channel that I've drawn here? It broke right through it. It broke right through the left side, right side price time match. It broke through the down channel, that falling axe to the downside, the resistance. Now there's a new one. I'll put it in right here, a very clear one right there. I just don't think it's going to get there right now. It's at 172, but that would coincide with the 9-period moving average of the weekly. I can't even talk weekly right now, other than to say that's the kind of patterns we're looking at in some of these stocks. So I thought I'd go through that. I just wanted to explain what my thinking was in a position that looked like it was really nice, but I had to manage an earnings report, which lately have been really, they've just clobbered stocks that have had negative earnings. I needed to protect the profit. But at the same time, if I realized that all our stocks today are doing fabulously, I would have said, you know what, I'm prepared to give up some profit on LinkedIn. Let's take a gamble. Let's take off a third and just let the other 2/3 ride. Big deal if it gets taken out, because our overall portfolio could make it up. I didn't want to play games. This is money. Some people might only be in this, and that's the way it is. So now a quick question of the den is, I had a question about, two questions. One was Merck. Merck is doing very nicely. Merck is right now at 59.43, having made an all-time high in leg E in the daily, leg E in the weekly, and leg C. I've spent a lot of time on this. I still think this is leg C. I don't think I can call it a G/C. The MACD is good. The stochastic is good in the monthly. Yeah, I believe it's going to test 61.62. That was the all-time high in this very big bowl formation, not even quite a cup, but a bowl formation. I drawn in this pattern a long time ago. Look how nicely it's matching the pattern that we drew it. And congratulations to one of our denners who has been in this for a very long time. And the other question was Facebook. AFB also doing nicely today. It's up how much percent? 3.60%, 3.6% in a brand new leg A. But here's a pattern that I talked about a lot. That is, you come down and you make an H formation. Let me try to do this as clearly as I can. H formation. I'll change the color so you can see what I'm looking at. Let's make it something. Let's make it blue. There are blue pattern right there. And in this blue pattern, what you'll see is that coming down, if this is like an H pattern. It's a successful H pattern. If Facebook FB trading at 61.92 up 213 is able to close above 63.65, it says it could go to the next peak on the left side, where a doji first, then a peak. So the doji would be the high of the candle of the 24th of March, which is at 67.36. and the actual peak itself is at 69.60. I'm doing one thing at a time. It first has to breach that arch high, and then we'll see if it can go high. But so far, good action, nice. Technicals, you see the technicals went down to a low at 54.66 on the price, but the MACD and stochastic were way higher. Another instance of a positive divergence, and the weekly chart is doing well, and it should still make a leg D. I thought about buying this because if it's going to make a leg D in the monthly, it's going to go above 72.60. I just need a little more evidence to see whether or not it's worth it. But yeah, I think it's good if you're long. Next question was URI, RUI, stock that I always keep my eye on for years and years, and I don't think have we ever bought this in the opening call? I don't think so. It looks to me like URI, United Rentals, is in leg E in the monthly chart. If at any point in May it goes 1 penny above 96.72, that extends leg E. MACD stochastic are fantastic. Not so much in the weekly chart. They are flattening out, but they're not looking great, but I had drawn in this cup formation. Most importantly, let's look at the daily, and you'll see that there's this rectangle formation that went to the left side, right side price time match after making a 96.72 high. It came down to 85.01 on the 7th of April. Now it's gone peak ABC, and it looks there's absolutely no reason not to think that it's going to make a D above 96.47. And 96.48 is a whisker, just an eye blink away from the all-time high. This pattern says higher highs and higher lows. It needs to stocks that go to 95 invariably go to 105, 113. Might not be right away, but it just that just seems to be the pattern. And then they talk about a split. So I'm suspecting that if URI breaks 96.72, we're going to watch real closely to see if there is support on any pullback in the 95 to 93 area. And if there is, the next move, and it could take time, but the next move should take it to 103, and then once it's in the hundreds, it works its way into the 105 area. But that's looking out. If URI does not make a new high and suddenly fails in the next 2-3 days, that says, watch out, we're in a rectangle formation. I'm not sure about shorting it, but I would wait then to go long and just say, let's see how it plays out, because it could go sideways for a while. So that's that. And just swing around, because there was a question earlier in the day. 1 second here. It was yesterday at the close, I think. Oh, was that it? Oh, and for those of you who did buy option calls on those the high-tech stocks, the beaten down stocks that we are long, I would consider, as I said to Mark earlier with a Staples trade, please don't get greedy. You've seen an unbelievably fantastic move in the calls. Please take a little profit. That's just for those people that email me to say that you bought calls. And there's a question here. Oil. Last time oil was off 2%, the markets tanked the next day. Can you do an oil chart on Thursday? I will do an oil chart next, and I'll spend a little more time on the oil charts and stuff like that, and the commodities when I do Larry's show coming up straight after this. So we've got a break coming. I'll be right in, and then the next hour at 1 o'clock Eastern, I'll be doing Larry's show. Be right back.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks. We're back. So, quick question about the oil. You know, I don't know about every time, but absolutely there is a correlation, but there's a much bigger correlation, and this is the correlation that I'm watching very closely. If in the OIH, that is the oil service sector, and I've drawn an oval pattern at the peak E top in the daily chart, Chapman Wave peak E, in the OIH daily chart trading at 51.99, down 13 cents. When the oil sector pulls back, my suspicion, because this is the oil service sector, because stocks like Schlumberger and others that have had really good moves and are holding at the highs, and I've already drawn in the weekly chart a diamond formation, it could be an oval formation in the XLB. Oh, how did I get to the XLB? That was a mistake. It was I think SLB. Schlumberger. I haven't updated it in the week. I used to have this notated completely. E in the monthly. Real quick, it is A, B, C, D, E in the weekly. In the daily, it had a spike. I'm always a little suspicious of this kind of spike because it usually creates a kind of I'll call it an oval pattern, but most importantly, that spike to the upside, if it isn't filled quickly, that becomes a signal to say, uh-oh, I'm coming back down. So let me just briefly say, I'm watching the OIH very carefully because if the oil service stocks and if stocks like like Exxon in the S&P start to pull back, and that's an oil, integrated oil, then you will see, because of the percentages in the Exxon, remember 2005 or 7 or whatever it was when oil came down sharply, what you saw was that the S&P was impacted. Right now, we've got the biotechs. That's why the S&P was impacted so badly. Now the biotechs, and I'll do this quickly. So if they start to pull back, you will see an impact in the IBB. But if they hold well in the in this S&P 500, in the IBB, the question was in the IBB. Well, the IBB has a lovely bounce off the low of 207.48. Went to a high the other day of 230, round number 230. Right now, you're looking at an attempt to get over that. It's gone to, no, it wasn't 230. Round number high of 235. No, 235.84 was the high. Now what you're looking at, we're at 234.90 as the high of the day. And until that downtrend line is taken out decisively, you won't see the IBB garner that much strength if other momentum stocks like the Amazons, the Googles, etc., and LinkedIn's take over right now, take over the strength. So this is a very critical period. Why? Because the Dow has not made an all-time high. Let me do this. Oops, that was a mistake. Let me do this as we were about to go out. Folks, my service is the opening call. Check it out. Go to the front page of TFNN. You can get 2 weeks free. That's number one. Perfect timing for this. Number two, why? Because this is like a potential inflection or deflection point in the market. That's number one. Number two is, in this particular time period, you've got the volatility index near its lows. What happens over the next few days is going to be very interesting, and I'm just going to show this real quickly. I'll do more of it during Larry's show. Look at the SPX daily chart. Working hard, leg B, but it hasn't broken above the 1897 high of 1897.28 high of the 4th of April. Until it decisively does that, we've got to watch this closely. But here's the irony of the whole thing. A move to 1897.29, 1 penny higher, makes this leg C in the weekly. And that says we should go high. It doesn't say how high, but it says that the downside should be contained for a little longer. So first 2 weeks, maybe even 3 weeks, might in fact be more of a high-level consolidation. I'll be back with doing Larry's show straight after this. Dow's down 8, S&P's up 1. It'll be a fascinating hour coming up. I'll be right back.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.